This is Exchange Traded Fridays, brought to you by ETF.com. I'm Sumit Roy, Senior Analyst here at ETF.com, and we have a very exciting episode for you all today. We're going to be talking about some of the best performing ETFs of the past month, how the holiday shopping season is shaping up, and what it means for retail ETFs, and the potential launch of Solana and XRP ETFs. So we got a lot to cover today. And as usual, joining me today are my wonderful colleagues, research lead Kent Tooney, wealth management editor Jeff Benjamin, and managing editor Ron Day. What's up, guys? How y'all doing?
Glad to be here.
Yep,
Absolutely.
doing great.
Glad to have you all here with me. And I want to start off by talking about some of the best performing ETFs of November. Kent, I know you wrote a piece about this, and it was a pretty eclectic mix of ETFs that you had in your table. Can you just talk about some of the more interesting funds that you saw perform really well in November?
Sure. Well, for those of us who follow the ETF industry and investments overall, or even those who don't follow it that closely, crypto was just the obvious big winner. You know, we had new ETFs rolling out, spot Bitcoin ETFs rolling out in January. Then we had the halving event, which is important for the Bitcoin cryptocurrency. Pricing was a big effect, but the really big impact on crypto was the election of Donald Trump, as he at least has said that he supports at least looser regulation. We talked last week about a new SEC commissioner coming in January. So the entire crypto industry is excited about that. So that pushed everything higher. But when we look outside of cryptocurrency, my article talks about that as well. And so, we're going back to say the largest spot Bitcoin ETF, IBIT, was up near 40%. So then when you go to, say, traditional equity sectors like consumer discretionary and financials, they were up close to 13% and 11% respectively. Now, those are outstanding returns for an entire year. So when you go outside of crypto, you see these strong returns there. That's kind of a similar story too. The financial sector is going to move on, more excitement over less regulation, which is something that's expected with the Trump presidency. Hopefully rates come down a little bit. That helps financials as well with their spreads and their lending and everything, profits. Same thing with small cap stocks. Lower interest rates are good for them as well. So far, so good. Were the big driving factors from what I saw in November, Sumit.
Yeah. Some pretty nice performance figures on your table there, Ken. And it's easy to forget, but we're talking about November, but that was the month of the election, and that seemed to be the driver of a lot of the moves that we saw, as you mentioned. I also have written about the best performing ETFs, not of November, but of 2024 as a whole. And that list is a little bit different, but also has a lot of overlap. You obviously see the crypto ETF still on the list. Things like GBTC, which is up 150% year to date. You name your spot Bitcoin ETF, it's up triple digits effectively. But not only that, we also see obviously the NVIDIA ETFs on the list as well for the year to date figures up triple digits. NVIDIA's been phenomenal performer. So it's really been a year of AI and crypto. That's going to be at the top of any 2024 ETF performance list. But I know you also mentioned, Kent, XLY. That was one of the best performing ETFs of November. That's the Consumer Discretionary Select Sector Spider ETF. And, it has a lot of weighting in one stock in particular, and that is Amazon. I think it represents something like over 20% of the ETF. And I mention that because another thing I want to talk about today is holiday shopping season. We just had Black Friday a week ago, and the numbers have come out. We now know how well the Black Friday sales have done, how many people are, buying and shopping for the holidays. And it's interesting. I read a story on that, and apparently US retail sales on Friday, November 29th, which is Black Friday, increased by 3.4% year over year. So that's pretty good, pretty solid gains in terms of retail sales. But there's a big divergence between e-commerce sales and in-person sales. E-commerce sales were up 14.6%. This is data from MasterCard Spending Pulse, I should mention, while in-store sales were only up 0.7%. So quite a big difference there between in-person sales and e-commerce sales. And I got to ask you all, I mean, is this something that kind of reflects what you're doing in your life as well? Are you doing most of your holiday shopping on the internet? Because these figures seem to suggest that that's what Americans are doing.
Well, I can start there and say I personally did. I like that convenience, and so I have a handful of people on my shopping list. So it definitely makes it easier for me. I was out there, and I bought a couple of things from my business as well yesterday. So I have multiple reasons to, but I also just enjoy the convenience of it. So I'm definitely a Cyber Monday person. I definitely will not be ever be caught out in Black Friday in store. That's me personally, though.
No,
Retailers
yeah.
hate me, Sumit.
They hate you, Ron. You're not doing
They
any
hate
shopping.
me. I'm not going to say I'm indifferent. Maybe I'm just terrified by the whole prospect of shopping and clicking and all that, but I have my behavioral patterns are completely random except for I start shopping on December 23rd or so.
At least you give yourself one day, Ron.
That's right. Get that 24-hour shot delivery in.
I don't even leave the house on Black Friday. So that's where I am on that day, that crazy day. But I will say this year, Cyber Monday, I did order. I play a lot of golf. I got a lot of golf buddies, and I ordered 8 dozen golf balls online that are personalized with little jokes and nicknames for all my golf buddies. And because I did it on Cyber Monday, I think I saved like $3.
That's
Eight
pretty good.
dozen? Jeff, do they
Yeah,
float?
eight dozen golf, and these
Do
are
they
like
float? Do they?
no, my golf buddies are all highfalutin, so I had to get the expensive golf balls, and I saved a measly $3. But hey, it's better than nothing, right? And I didn't have to leave the house, so and I probably did that during the working hours. So maybe if I hope I don't get docked for that time, Ron.
You basically got paid for buying those, Jeff.
Yeah, there you go.
Yeah, it's $3 saving.
That's what it was. But that's me. And I don't know. I mean, I'll do some more shopping too. I'll probably go out to some stores at some point. I won't be as late as Ron, but it'll be something I stumble across that I need. Maybe I'll do some online stuff again. I don't know.
Hey, Simi,
Yeah.
if I could just toss out like along the lines of best performers, we did have the piece that ran yesterday based on the State Street report saying that the U.S. equities are best in show for the year. That U.S. equities are just crushing equities around the planet as
Oh
far as
yeah.
inflows and gains. That there's really and one thing that Matt Bartolini said in his piece was that the next 4 quarters are also looking pretty strong. That there's some kind of clouds gathering beyond that, but he said that corporate earnings are like improving in their quality. So just thought I would throw that little piece out as we get closer to the end of the year.
No, that's some great color, Ron. And you mentioned U.S. equities are crushing every other geography, and there's been a lot of talk about this actually on X, how the U.S. stock market is just swallowing the global stock market. If you look at the market cap of U.S. stocks versus the market cap of global stocks, they represent almost 2/3 of the market cap, even though the U.S. only represents something like 1/4 of the world's GDP. And it's just, we're getting all the inflows, we're getting all the performance here in the US, and the big just keep getting bigger here in the US. And it's driven by obviously our mega cap tech stocks. They just keep going up and up, while most of the rest of the world, their stock markets are kind of stagnant. And, that's essentially what you're saying, Ron. But, I
Yeah.
want to circle back to, all this talk about holiday, sales. We're not just talking about this for fun. We got to kind of tie this to ETFs. And what my piece essentially said is that, online sales, like we talked about, that's where the action is happening. And Adobe is forecasting that e-commerce sales are going to be up 8.4% this year, much faster than, the sales increase in-store. And that is reflected in ETF performance. We got a couple e-commerce focused ETFs like the Amplify Online Retail ETF, ticker symbol IBUY, and ProShares Online Retail ETF, ticker symbol ONLN. These are outperforming other retail ETFs, which are more focused on the brick and mortar type of retailers, like the Spider S&P Retail ETF, ticker symbol XRT. That is up this year. It's up 16%, but you compare it to those two e-commerce ETFs, they're up almost 30%. So double the performance. I know e-commerce has been kind of the secular trend that's worked over the past, 10, 15 years, thanks to Amazon. But it's not just Amazon. Shopify is another big e-commerce winner. So, if you believe in this trend, maybe you want to take a look at those two ETFs, especially as we moved throughout the holiday season. Anyway,
But one thing I'll
Yeah,
add there, Samit. I'm sorry about that, but I mean the big box retailers, so to speak, like Walmart and Target, they're all in on the online game as well. I heard that Walmart had a big push on that. And this is getting slightly off topic, but that stock, Walmart stock, is up over 60% last time I checked. So even the big box boring companies are getting in on the e-commerce game.
great point, Ken. And yeah, we used to think of Walmart as just kind of this brick and mortar retailer is just getting its lunch eaten by Amazon. But you look now and Walmart is, neck and neck with Amazon in some cases. It's this big online retailer as well. And a lot of people now talk about omni-commerce, how, you kind of combine in-store and e-commerce to make it seamless. You can buy online, return in-store, things like that. And not only Walmart, you think about Costco, another massive US retailer, they've also gone kind of big into the e-commerce game. I think they partner with Instacart. So the lines are kind of blurring. It's not just e-commerce, it's not just in-store. Obviously, some companies are more focused on one than the other, but over time, I think every company is kind of going to be a hybrid. So we'll see. But our next topic is crypto. We've been talking about this a lot over the last few podcast episodes, and for good reason. Bitcoin was just knocking on the door of $100,000. Didn't quite break that level, but we'll see if it does in the coming days and weeks. But we're not here to talk about Bitcoin. We're here to talk about two other crypto assets that might see ETFs of their own. And specifically, those are XRP and Solana. Ron, I know you wrote recently about the potential launch of XRP ETFs. Can you talk a little bit about that?
Yeah, well, I think we've been this has been a topic over the past few weeks. Is that with the Trump administration, there's been a flood of the more not esoteric, but the smaller, outside of Bitcoin and Ethereum, the smaller cryptocurrencies. Solana, as you just mentioned, Hedera, HBAR, right? Is that other one? And a couple others. Tether. No, there was not a Tether one. I
Ripple.
apologize. But anyway, it's like the floodgates have opened. It's looking
Yeah.
like there's going to be a more crypto-friendly head of the SEC, and what's his name? Scott Bessent heads Treasury. He's also much more crypto-friendly. XRP was, I guess that's a Ripple Labs token of the XRPL ledger. Was kind of top 10, and now it's a top 3 crypto. Had a really kind of doubled in price over a week. It's kind of settled down since then. Crypto it's just it's crazy news.
Yeah, I mean, if you look at the chart of XRP, it's just insane that the thing's gone up, I don't know, doubled in like a week or tripled in like a week. And like you said, it's number 3 in terms of market cap. If you go to coinmarketcap.com, it's right behind Bitcoin and Ether. The XRP is one of these crypto assets that's been around for ages, but it's kind of lost its popularity. I mean, other than the move we've seen in the last couple of weeks, not a lot of people talk about XRP, right? It was this crypto blockchain that was kind of optimized for making transactions. But from what I hear, the stable coins have kind of taken that market, and those are built on Ethereum. So I don't know
Yeah.
if it's XRP, if there's anything, a real bullish fundamental case for XRP. But Solana, that's another one where we're seeing filings. That actually has a lot of traction, a lot of backers. And the market cap for Solana recently topped $100 billion. So this is definitely one of the bigger crypto tokens, number five after XRP
Yeah.
and Tether. And Tether is like a stable coin. So that's the kind of difference. So you could actually say Solana is number four.
I don't know if, of course, I've not looked under the hood on many of these things. But I just wonder, XRP, sometimes you read these analysis and people say, well, XRP has better properties that make it more, again, as we were saying, cross-border transactions and those sorts of things. And I don't know if some of that information is now starting to filter down, like the utility of certain coins, right?
Yeah.
We just think, crypto, most of us we still scratch our heads when we talk about it, but there's different applications for all of these that my sense is that, regular folk are just starting to tap into, where you can see growth of one versus the other because of their applications, like what you'll use it for. I mean, right now I think we just go, oh, I'll buy IBIT or I'll buy ETHE just because you want to ride the wave, but you don't know anything fundamental about the coins themselves. That's just kind of my gut sense.
Yeah, yeah. Over time, as people learn about these, especially as these get introduced to the wider investment world through ETFs, people are going to have to learn about each individual coin and what it represents. We talk about Solana. This is a big one. If we see a Solana ETF launch next year, Solana, the blockchain, is effectively a competitor to the Ethereum blockchain. But they make trade-offs, right? Solana has been kind of optimized for low cost and high speed, while Ethereum's kind of been optimized more for decentralization. But speaking of which, obviously we've talked about the huge success that spot Bitcoin ETFs have seen this year. We're talking $32 billion of inflows since their launch in January, and $50
Yeah.
billion of inflows if you exclude the outflows we've seen from the Grayscale Bitcoin Trust,
Right.
GBTC. But compare that to the Ether ETFs, which launched in July. Those have only seen $600 million of inflows, or 4 billion if you exclude the outflows from the Grayscale Ethereum Trust. So huge divergence between the flows for Bitcoin ETFs and Ether ETFs. So that kind of makes me wonder, how much demand are we going to see for Solana ETF, XRP ETF, things like that.
Yeah,
Another,
I don't know.
yeah.
I
Go
don't
ahead,
know
Ron.
if it has to do with, fundamental, or if, I'm sure it's all being driven by comments on Reddit or whatever boards, and, people learning in drips and drabs what, the actual applications of some of these. But I did, I did notice that Ethereum seemed like it was leveling off, but it has jumped again. Um, you know,
Yeah.
um, so, but again, I don't think we're just seeing the really big inflows in
Not yet.
Ethereum. Yeah.
Yeah. And the timing matters, right? In the current crypto cycle, Bitcoin has just been absolutely dominating. All these other assets are just kind of coming along for the ride. They haven't been doing as well. But if we go back to, say, 2021, Ether was the assets. Ethereum was the asset everyone wanted because all the NFTs were built on top of it. We're not hearing so much about that right now, but maybe that changes, in the future. So things could change. But another data point I want to throw out there is, how Grayscale has all these kind of quasi closed-end funds. It had one tied to Bitcoin, one tied to Ethereum. Those have now converted into ETFs. It also has one tied to Solana, and it currently has around $120 million in assets under management. But you look at the Grayscale Ethereum Trust, that had $10 billion in assets under
Hmm.
management before it converted into an ETF. So maybe that gives you a sense of, how much demand there is for Solana. It doesn't seem like there's a ton of demand for a Solana fund based on
Yeah.
these numbers, at least. Yeah.
Yeah. So Grayscale, I don't know how many Solana filings there are, but I guess Grayscale brings a little bit more of a name to it and draws attention to the whole thing. Didn't that happen with their Ethereum fund too? They lost. There was well, they did. They I guess they divided their Ethereum fund into like a mini
Yeah,
ETH,
they
and
have a
yeah.
mini Ethereum fund. They have a mini Bitcoin fund. Those have lower fees than their original funds. Yeah, so we'll probably see something similar with Solana. But I know, Jeff, you wanted to chime in here. You wrote a piece about crypto this week about how advisors might be missing the boat.
Yeah, well, this is a story that it seems like I write it almost every month, or I have since January with the launch of the Bitcoin ETFs. But it's kind of an interesting thing, and we talk about the growth and flows into these ETFs, and the financial advice industry, which is the largest buyer of ETFs overall, is still mostly on the sidelines because they're financial advisors and they look at this crypto stuff and they see, how do you value this? How do you do fundamental analysis on it? They still see it largely as a supply and demand issue. You got a finite amount of coins and a growing demand that's driving up the price. So financial advisors, they see it as an alternative. You put 1 to 2% in client portfolios, if that. A lot of them are stiff arming it all together. I mean, there are some serious proponents in the financial advice industry, and that it seems like that's kind of slowly growing. But that's, to me, the floodgate that is still being held closed. Is if you get financial advisors to start allocating 2 to 5% to client portfolios, that's going to be a serious crypto rally.
What's going to take? What's going to take for that to happen? What has to happen for that to happen?
I don't know because, like I said, you've got financial advisors. Maybe they're old school. They look at this and say it's digital. It's I don't understand it, or maybe they don't care to understand it. Maybe they do understand it and they still don't like it.
They don't want their clients calling them up and saying, "Oh, Bitcoin just fell $15,000," and you got to start telling people, "Oh, just stay in."
Well, yeah, I mean that
That's
can
not
happen
how
with
people.
anything, but crypto is volatile, and it's probably going to be volatile forever. But I don't know. It's going to be a kind of a seismic shift that is going to happen, and I can't imagine that the financial advice industry is going to just ignore it forever. But like I said, you get 2 to 5% allocations, and that's a lot of money. That's a lot of movement, and it's all coming in through ETFs because it's financial advisors.
I can add a little bit there. I mean, as an advisor myself, I mean, there's a hybrid area. I mean, I think I'm right about this, but about 4 clients where we're holding spot Bitcoin ETFs. And for years, I've had clients say, "Hey, should we buy Bitcoin? Should we buy Bitcoin or other cryptocurrencies?" And I've said, "No, it's too speculative. Said we should really avoid that. If you want to buy it, go open your own wallet and you can buy Bitcoin cryptocurrency there and hold it there." But with the onset of ETFs, I thought that was at least a good entry point to discuss with some clients. And what I mean by I'm kind of like middle ground or a hybrid advisor there, certainly wouldn't recommend to my 80-year-old retired clients, hey, have you thought about buying a Bitcoin spot ETF? I would have to explain to them what the heck that means. But for clients that are in their 30s and 40s, they are really on board with it. I'm glad that we did because we've got over 100% return for them, and we're trimming off some of our gains now. But my point is that I think some advisors might warm up a little bit to it, but certainly wouldn't have 5% allocation to all of their clients across the board.
Yeah, absolutely. And it seems like, we're just getting started, right? These launched in January and people are going to be hearing more and more about them. And in fact, speaking of that, we are opening up nominations for ETF awards. Jeff, I know you want to talk a little bit about that, but one of the new categories that we have is crypto ETFs.
Right. Beginning of our awards season here at ETF.com, the submission that you could start submitting nominations December 2nd, running through January 10th. The nominees will be announced on January 30th. Our event, our awards ceremony is April 23rd in New York. And I'm going to tell you, we got a lot going on. It's a lot of fun. Obviously, the award ceremony is a lot of fun, but the nomination process, there's I don't know the total number of categories, but I'm going to tell you the new categories that we have this year. Active ETF of the year, commodity ETF of the year, leveraged inverse ETF of the year, emerging market ETF of the year, crypto ETF of the year, and best service provider of the year. Those go right in there with all of our existing categories that are still there. Thematic ETF of the year, best new active, best new ETF, and so on. Get your nominations in there. You can go to ETF.com and find the awards link. Maybe we can put that in our show notes. But like I said, the nominations are open until January 10th. So submit away, folks.
Great stuff, Jeff. Really looking forward to seeing how who wins some of these categories, especially those new ones, leveraged and inverse ETFs and crypto ETFs. These have been super hot over the past several months. Mm-hmm. But I think that's a great place to wrap it up. I want to thank our listeners for tuning into Exchange Traded Fridays. Remember, if you haven't already, subscribe and follow us wherever you get your podcasts. And if you have a question or you want to share your thoughts, join the conversation with us on Twitter at ETFCOM. Catch you next week.